Traders, we're about 2.5 hours into trading on Monday, March 7th. Not a very good looking market. I have some concerns right now on a longer term basis. That is why my pick of the day on Friday was a short. Let's start there. General Motors. That was my short of the day. You can see how the stock, this is about where the video came out. You can see how it has continued to decline the entire time. Going to the daily chart. Why did I like it so much? Breakdown through horizontal support, long red candle closing near its low. Follow through today. We'll be looking for a similar type of pattern when we find today's stock. Very important to go into the S&P 500. You can see how we've got weakness right here throughout the morning. Very small, shallow bounce, and then boom, right back at it. Right now, we've got what I believe is a bearish divergence setting up. I am short right now. I'm favoring the short side on all of my plays. Overnight, we had about a 100-point S&P 500 decline. Market rallied all the way back this morning, almost to fill that overnight gap. Global markets, very, very weak. Down 3%, 2.5% in Asia and in Europe. That set a very negative backdrop. So let's take a look at the longer term picture of the S&P 500. Here you'll see downward sloping trend line intact. Click GTC, click on that bar right there, click on that bar right there. There's your downward sloping trend line. If I do similar right here, you will see that we also have a downward sloping trend line on the downside. And I can click this candle here, and I can click this candle here. I need to use the other candle, but in any event, you can also see the downward sloping trend line here, and that gives us a channel on the downside. There is your trading channel. These trading channels tend to be very stubborn. They are not easily resolved. Sure, you get lots of little bounces in here like this, and then a series of lower highs and a series of lower lows. This culminates with a series of long red candles through the lower end of this downward sloping trend line. That would be the selling climax. Where might that happen? If I took a look at the previous, well, a weekly chart helps me identify that. If I go into the weekly and I take that high and I take that low and I do a Fibonacci extension, so let's go ahead and do that right now. And I'm going to take a look at that high right there. And I'm roughly going to line it up with that low right there. And that takes us down to approximately the 390 level. The 390 level is also 20% off of the all-time high. That would put us in bear market territory. Worst case scenario, yes, we could get there. Here are the other warning signs for the market right now. Forget about all the political news and the war and this and that. If we just take a look at the price action, that's really all we need to do. You can see this is the 200-day moving average, the 100-day moving average. In the past 2 years, we barely spent any time below the 100-day moving average. In fact, we just brush on it and then off to the races. Look at us now. We can barely get above it. Look at the 200-day moving average, which hadn't been tested in a very long time. Now we have actually spent almost 3 weeks below it. That tells you that the selling pressure is intensifying. This is not a buy the dip market as it's been for the last 10 years. Conditions are changing. And I know I had gotten questions in the last 10 years. When can I short the market? When can I short the market? When can I short the market on a swing basis? You have to wait for technical confirmation. Right now, we have that technical confirmation on the downside. I'm getting fairly bearish in here just because of the price action that I see. The dips are very brief and very shallow, and then we get a new leg lower. You can see upward sloping trend line, boom, new low, upward sloping trend line. They're right back at it again. I believe the market's going to struggle here. If we go into QQQ, you can see that we've got a breach of the 200-day moving average. What's more is we have the 50-day moving average crossing below the 200-day moving average. That is known as a death cross. Very bearish. Downward sloping trend line here as well. So not good. Not a good backdrop right now for the market. That's why I'm favoring the short side. So I see better opportunities there. I see more sustained selling. Let's go back into the 5-minute chart so that we can continue to monitor it. This is going to be a bearish trend day marked by steady, persistent selling. So during this process, there weren't any big bounces, which would be a sign that there is some buying coming in. No, instead, every tiny little bounce is just squash, squash, squash. Here we go. This was a tell. This is a candle that I had pointed out in my chat room. And I had mentioned if this candle is easily given back, that's not going to be a good sign because that'll just tell us that this was a short squeeze. And there on that red candle, we gave it all back and then some. Now we're continuing to drift lower. So I believe we're going to continue to see some more selling pressure. Let's look at global markets. There are some global concerns right now. FXI, China came out. They expect to have 5.5% GDP growth this year. If you believe that. In any event, if they've got 5% GDP growth, which they're showing right now, why isn't money flowing into China? It has the highest growth rate out of any country in the world. Money should be flowing in. It's not. And this has been happening. Let's go into the weekly chart. You know, I've been pointing this out for months. Way back in here, I was pointing it out. Why is China's market going down when we're getting past all of this COVID stuff and global economies are supposed to be recovering? Why is China at a 52-week low? Could be credit concerns. Uh-oh, credit concerns. That is one thing that can spark sustained market selling. So, could be because of European banks and their exposure to Russia. Could also be that European banks have a ton of garbage on their balance sheet. The ECB has allowed them to pledge junk as collateral for many years. That's coming back to roost. Property is an issue in China. Property developers are defaulting. They're having a hard time making those payments. Maybe that's another reason that China is going down. When financials are heading south, it is not a good sign for the market. So let's take a look at some of the biggest European banks. Credit Suisse. Whoa. Deutsche Bank. Equally nasty. UBS. Not good. SAN, I believe, is Santander. Another horrible chart. So look at that selling right in there. This is not good. These stocks are getting absolutely pounded. And U.S. financial companies are also getting pounded. If you look at some of the weakest stocks today, they're in the financial sector. This is JP Morgan Chase. Not good. So there could be some credit concerns on the rise right now. And I would caution you not to look at the market right now and to think about, well, inflation. Market has rallied during times of inflation. So, yeah, okay, it's high right now. It's temporary. It'll be resolved. Interest rates, hey, some of the biggest market rallies have happened during rising interest rates. So, not a big deal, not a problem. We'll be able to overcome that. Oh, hey, wars, we can overcome that as well. The Ukraine thing is going to blow over. Everything will be fine. What if those headlines aren't the problem? What if the problem is credit? So I think it's important to make sure that you are watching for those warning signs. And banks selling off like this is a major warning sign. I hope I'm wrong. I really hope I'm wrong. So right now, forget all that nonsense that I just told you from a fundamental standpoint, from a credit standpoint. Look at the chart. Downward sloping channel tells you got to favor the downside. As long as this downward sloping trend line is intact, you should continue to stay short. That's where the 200-day moving average comes into play also. There's an alert to tell us to get short right now. So that is a key point, that 445 level right now. And as far as support is concerned, this 427.50 level has been very, very important. Go back into the weekly chart, and we could see from back in July that support level had been tested It's right in here. It had been tested there, 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 there. If this support level starts to go, it won't be good. This is a weekly chart that we're looking at. So be very, very careful in here. At least on a 2 to 3 week basis, I am bearish. Yes, we've got the FOMC statement coming up. Could that be causing some nervous jitters? For sure. We've got a lot going on in the market right now. Just follow the price action. So let's go in and take a look at what the market's currently doing. I'm going to show you the chat room very, very briefly because I want to scroll right down to our market rating, and then you'll be able to see that our market rating is bearish on all time frames for SPY and for QQQ. Okay, well, we know the 1OP indicator works great on a 5-minute basis. What if it's confirming that sell signal on a 15-minute basis, on a 30-minute basis, on a 1-hour basis? Well, yes, that does strengthen the sell signal. Okay, so we've got a sell signal across all time frames. What if we were able to find stocks that were also very, very weak? So you combine the 1OP indicator for stocks and you use relative strength and relative weakness as a secondary indicator, and that generates buy and sell signals. Okay, so what if we had a stock that had a sell signal on a 5-minute basis? Well, that would be pretty bearish. What if it had a sell signal across multiple time frames? That would be a really good sell signal, and relative weakness on a 4-hour and a daily basis. And the stock is below the prior day's low. And it has heavy volume today. And it has good option liquidity. And it's weak on a 5-minute basis. Well, let's mark those check boxes. These are going to be some very high probability plays. These are going to be excellent shorts. I could click through all of this and show you which stocks look the best from a short standpoint. And I've already done that. I want to keep the videos as short as I can. I'm going to pick out MTCH just for the heck of it. I'm not sure why MTCH would be in trouble with all of this. People should still be dating, right? But you can see that 3 stacked red candles, very little overlap, closing on their low of the day. This stock is very, very weak, below all the major moving averages as well. So I like MTCH. Let's go into that 5-minute chart. Yeah, that stock is continuing to drift lower. JD is one that I'm going to highlight as my short of the day. You can see, let's go back into the 5-minute chart, the market. You can see this little bounce in here, continued selling. Let's take a look at what JD did. Nothing during that market bounce in here. It continued to have selling pressure on it. I think JD is going to work on a daily basis. I think it's going to work on a swing basis. You can see those big drops, and now it's breaking horizontal support. Any of the Chinese stocks have actually been super weak. PDD, very weak chart there. BILI is another one. The list goes on and on. If it's doing business in China, those stocks are super weak. So I can also go through my heavy selling list right now, and I can look for stocks that have red sell signals across multiple time frames. So this is a search. Look at all the red. It is a sea of red. When? Very, very nasty drop. Breaking horizontal support. Again, they do a lot of business in China. When could easily be my bearish pick of the day. Maybe it should be my bearish pick of the day. There's JD, bearish across all 5 time frames. So if it were bullish on any of these time frames like SQ is on a 5-minute basis, you would see a green buy signal right there. If I wanted to, I could go in and take a look at how the stock stacks up across multiple time frames, and I could see if it's got heavy volume across multiple time frames as well. So in most of these cases, they have both sell signals across all time frames and heavy volume. That's how we make the search very, very easy to find opportunities. And let's go in. I'm going to take a look at Oracle very quickly because I happen to notice that. And let's bring that chart up. Not as weak as some of the others that we've seen. So financials are going to be a very good short for you. Chinese stocks are going to be good shorts for you. Win, I like that. I'm going to make win my bearish pick of the day. I love that price action. I love the fact that it's getting through that D1 support level right in there. It's been below the major moving averages. Win is your short of the day. Thanks so much for watching. I hope this video has helped you. I'm trying to shorten the format for it. Trade well. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.